Hi guys, in this video I'm talking about risk management in Forex, and I'll be focusing more on prop firm accounts. That is, if you have a challenge account or funded account from proprietary firms. Okay, so in this video we'll be using an account of 10,000 US dollar as our example for the breakdown on how to calculate your risk while trading Forex. Okay, I will also be doing an explanation on how to calculate your risk as well on indices later on. So let's start with currency pairs. Okay, so let's say, for example, we have a 10,000 US dollar funded or challenge account from any prop firm, and they are giving us a target of 10%. Okay, they are giving us a target of 10% for our phase one. That is, they are telling you to make 1,000 US dollar for phase one, and for your phase two target, you are asked to make 5%, which is 500 US dollar. And for most prop firm, they will tell you in a day you can't lose more than 5% on your trading accounts in a day. And sometimes overall, they tell you you can't lose more than 12% on your trading account. Okay, so in a day you must not lose 500, and overall you must not lose 1,200 US dollar on a $10,000 account. Though this varies from prop firm to prop firm, depend on the one you are using. Okay, so for you to have a good risk management in place and not lose this account, for you to be profitable on this account, you have to make sure you are risking a certain amount per trade. Okay, and for me, I always advise my students to not risk more than 0.5% per trade. Okay, that is, for example, you want to get into a buy trade, please don't risk more than 0.5% of your trading account. Even if it's a 100,000 account, even if it's a $200,000 account, even if it's a 1 million funded account, you don't want to be risking more than 0.5% per trade. See, this is your choice. You can decide to risk 1% per trade, but if you are not yet let me say, professional in trading, like if you are still like a beginner intermediate trader, I will advise you don't use more than 0.5%, because if you have more losses than you have more wins, you will quickly blow your accounts. Okay, you quickly lose the account. Okay, so I always advise you use 0.5%. It's your choice. You can use 1%. That's fine by you if you think you can trade. Okay, so if you are risking 0.5% per trade, so let's take, for example, we are having this 1,000 US dollar to make, and let's say in 2 weeks of trading, of starting this challenge account, you took a total of 10 trades, for example, and if you were risking 0.5% of $10,000, that will leave you with, if your trade hits stop loss, that means you are losing 50 US dollar per trade. Okay, so now let's now say, maybe for example, in a period of 2 weeks, you traded, like you had 10 trades in total, and all trades were losing trades. So if you multiply 50 US dollar by 10 trades, that will leave you with a minus 500 US dollar. Okay, so now in 10 trades, you had a loss of minus $500 from your 10,000 US dollar account. That will be leaving you with 9,500 US dollar, of which you still have your account intact. And I don't think there's a way you will have 10 losing trade in one continuously like that. I don't think so. So because before you take on any Profem accounts, at least to some level, you should have knowledge of the market and trading. So this is just for an example. So that will make you losing 500 US dollars. So you still have your account intact, okay? But for someone that is risking 1% per trade, that means on every trade, you will be losing 100 US dollar. So now let's take, for example, you took 10 trades in like 2 weeks. That means you already lost 1,000 US dollar, which is too much, okay? Whereas someone with 0.5% risk per trade, by the time you are having 20 trades, and you add losses on the 20 trades, you are losing just 1,000. So you have more rooms to take enough trade if you are risking just 0.5% of your account. And trust me, if you say, okay, 0.5% is too small, it's not too small, okay? Because with 0.5% of your account, if you have 6 winning trades or 5 winning trades, you would complete your 1,000 US dollar target with 5 winning trades, okay? Using the same, using this same risk of 0.5%, okay? So I think with this, you are able to understand the concept of this risk, okay? So now, uh, let's move to reward now. We've talked about risk. Let's move to reward. Reward is if the trade goes in your favor, right? And whenever you take any trade, always make sure your trade RR, always make sure your risk to reward is always greater than or equals to, sorry about this, always greater than or equals to 3. Always make sure is over 3 RR. You can have 4 RR, 5 RR, up to 100 RR as you wish, okay? But always make sure your reward is always more than or equals to 3. Okay, so what did I mean by that? Okay, let's quickly move to this side of this trade. This is GBP USD. We have a break of structure right here. So we have this, okay, let's say, okay, from right here. Okay, let's just pick this. Just for example, we got into a buy trade right here, and as you can see risk slash reward ratio 10.12. Okay, so this is telling you that if we got into the trade at this point and our trade its target, it take profit, we are having a risk to reward of 10. Okay, that is 10 RR. So that was what I was explaining. When it comes to reward, make sure your reward is always equal to or greater than 3. Let's say, for example, we got into the trade right here and we decide to take profits, maybe at this point right here. Maybe we decide to take profit at this point. You can see is have given us a risk to reward of 4. Okay, so always make sure if you are in any trade, your trade is going to give you RR that is greater than 3. Always make sure it's more than 3. You can have a RR of 3, 4, 5, 6, 10. Some people even cash risk to reward of 30 RR. Okay, so but always make sure your reward is equal to 3 or more than 3 RR. Okay, this is to assist you to mitigate the losses that you may have. Okay, now for example, now per trade we risk 0.5%. Okay, so on this particular trade now, let's say I took a trade and it was a losing trade. I lost $50 out of my account. The next trade I'm taking, if it's a winning trade, I want to make sure I'm getting nothing less than $150 US profit from that trade. So if let's say I decide to take profit at 3 RR, say I won $150 US, that first trade I took that I lost $50 US, By the time I'm winning 150 US dollar, the 150 US dollar will be able to compensate me for the loss I had earlier. So now, I have 10,000 accounts. I lost $50. I'll be left with 10,950 US dollar. By the time I make extra 150, the 50 US dollar will now be deducted from the 150. I'll still be able to have a profit of 100 US dollar left. So this is why I say your risk to reward must always be up to 3 or greater than 3, so that in any time you have any loss, it will be able to compensate. Anytime you have a winning trade, it will be able to compensate for the losses that you might have had earlier. Okay, so now let's move into how you will know what lot size to use. Now that you know what you are risking per trade, so we already said only risk 0.5% per trade. So now let's move to this chart right here. So now we have this GBP USD buy. We want to get into a buy, and in this trade, I don't know what lot size to use for my market execution on my MT4 or MT5. I don't know what lot size to use for my buy limit or market execution. All I need to do is you can go to this my FS book. Just click on position, just on your Google, go on Google and type position size calculator on my FS book. Okay, so this page will be displayed for you. This page right here will be displayed for you. And on this page, from right here, we are trading GBP USD, right? This is GBP USD chart, okay? I want to get into this buy. I don't know what lot size to use, but I know the percentage I'm risking. I want to risk only $50 on this trade. All I need to do is come here. What is the currency pair name? We want to trade GBP USD. You will select GBP USD. What currency are you trading with? Is it US dollar? Is it Great Britain pound? Is it Canadian dollar? You choose what you are trading with, your account. We are trading US dollar. What is your account size? From our example, we are trading a 10,000 account from a prop firm, right? Then what are we risking? What's our percentage risk? Like I said, always risk 0.5 of your trading account, okay? So you will input 0.5. What is your stop loss pips? We'll go back here. Sorry about that. We already said this is our entry and this is where our stop loss is. On this page, this is our stop loss. Our stop loss is 13.9 pips. So you go back here and input 13.9. That is, we are having a stop loss of 13.5. For this trade size lot, just leave it as 1. Just leave, do not alter this one. Then you click calculate. By the time you click calculate, this thing will automatically generate the amount you are risking. So now this is telling us that on this trade we want to take on GBP USD, we'll be losing 50 US dollars, okay? And this is the lot size you are going to use, 0.36. Okay, this is the lot size that you use. That is the this is the reason for coming to calculate this. We do not know the lot size to use, but this has calculated it for us. So now on your MT4, you will go and input 0.6 as your lot size to trade this GBP US dollar. Okay, so on this page now, we are going to use 0.36 lot size. And if this trade hits stop loss, for example, let's say this trade, instead of going up, it came down and it hit stop loss, we got stopped out of this trade. That means we'll be losing just 50 US dollar and our account is still secured, because in a day we can lose $500, because the prop firm says we can lose $500 in a day. So you can imagine with one trade, you are only losing $50. Now, for our profit, we've decided that we want to take profit at this level. How many pips is our take profit? Our take profit pips is 142 pips. Okay, all you need to do also to get to know the amount you will be winning on this trade, all you need to do is go back here, click on home. You see forex calculators right here, and you will click profit calculator. We want to know how much. Now we know how much we are risking. We are risking $50 if this thing hits stop loss. But for take profit, how much are we going to win? You go to your profit calculator, you click on it, and profit calculator will be displayed. We are trading GBP USD. We are trading GBP USD. You will click on GBP. You search for GB. You can just input it right here, GBP USD. Yes, you click on it. Our currency is US dollar. Our lot size, we already know our lot size. We use 0.36 as our lot size, right? And your open price, that is the price you got into the trade. Right here, you come back to this place. What is the price we got into the trade? We got into the trade at 1.30184. That's our entry. 1.30184. Okay. And close price, that is the price where we are taking profits, like where we are exiting the market. Our target price is for 1.31605 right here, 1.31605. Then you come here and input 1.31605. okay, and it was a buy trade, right? Then you click calculate. So now this calculator is telling us on this particular trade, we'll be making 511 US dollars. That is now on this trade now, by risking just $50 right here, minus 50 US dollars right here, using 0.36 lot size. Okay, we'll be making a profit right here. We'll be making a profit of 511 US dollars. Okay, right here, if our target was it. So this is how to calculate your risk per trade. Okay, this is how to risk per trade. Okay, don't just get into the trade using any lot size. Okay, you don't want to expose your trade. Always, there are three important things whenever you want to get into your trade: your entry points, your stop loss points, and where you are taking profits, your profit target point. Okay, these three things are essential, and also the lot size that you will be using on the trade. So you can imagine now, you have a 10,000 account, and you use this lot size, you risk this $50, and your target is your prop firm target is 1,000. On this trade alone now, you've made $500. Okay, so who knows, your next trade, if you are able to secure another trade like this, in 2, 3, 4, 5 trades, you are already completing your profit target for your phase 1 or phase 2. Okay, now let's take, for example, you have a losing trade. Let's say you win this trade, and you got into another trade, and that trade was a losing trade. Because you are risking only $50, by the time you hit, let's say, for example, you want to sell this pair right here, you have your stop loss there, you have your entry, and you were expecting market to come down, and suddenly you got taken out of this trade right here. This trade hits stop loss. You will only be losing $50 here if you use this position size calculator to calculate. Okay, you will only be losing $50. So now, if you remove this $50 from this 511 US dollar, you will still be having about 400 and something. You'll be having 461 US dollar left. Okay, and you can still try another trade. That trade might be a winning trade, and you will be able to recover your loss again. Let's even take, for example, you took another trade again. Let's say, for example, you took a buy trade maybe from this point right here, and you were expecting price to push up, and you got stopped out of the trade again. This became a losing trade, and you lose another $50. This will make a total of $100. You lost this trade and also lost this trade. That makes a total of 100 US dollar loss. If you subtract this 100 from the $500 you made there, you'll be left with 411 US dollar in profit. So this is why risk management in Forex is very, very important, okay? It will allow you to safeguard your account. It will allow you not to blow your account quickly, okay? So you can imagine, even if I had up to 4 losses, that will still leave me with $200. I still have profit of $200 left, okay? And my next trade can be a winning trade, okay? So this is why you should use the right risk management at all times, and do not use more than 0.5% risk on a trade, okay? On a trade. Also, control yourself not to take too many trades in a day or in a week. Always make sure you are waiting for confirmation entries before you take your trade, either buy or sell trade. Always wait for confirmation. This will give you room to have more profitable trades than you will have more losing trades, okay? So that's all on risk management in Forex. And if you have a 100,000 account, it's the same thing. By the time you reach 0.5% of 100,000, you'll be losing $500 per trade, okay? So it's that simple, okay? So thank you guys for watching to the very end, and if you have any question, please leave them in the comment section, or drop a message for me on my Telegram handle at Temilore. All right guys, thank you.